let's dispel a few myths about day trading. First of all, it's not hyperactive 20, 30, 50 round trips a day. Day trading simply means we're going to get in and get out on the same day. So let me take you through this morning's day trades. This is the day before Thanksgiving, and I was thinking there may not be a lot of follow through. There might be a lot of people who are going to start to zone out before the Thanksgiving holiday. So this was a great day in terms of potential follow through, and yet we're sitting on 4 winners. So let's walk through the timing and the strategy that I use for my day trading every single morning. The first thing that traders do is they think they need to trade a lot. I look for 1 to 4 trades per morning. Morning means from 9:30 to 10:30, no later than 10:35 every morning. And actually, it's really 9:35 to 10:35 because I let the first 5 minutes of the morning go by. I want to see the volume come in. I want to see the spreads narrow. So I'm day trading for 1 hour a day. And I know that sounds like, oh my gosh, one of those people like 8-minute abs. No, not at all. This is really the most effective time for the strategy that I'm going to show you. So 1 to 4 trades per day, 1 hour a day, and 3 core setups. So let's go through the first trade. We'll go through these in order. The first trade that we set up was NVDA. Now, there are a few things on my screen for those of you that aren't familiar with them. Really simple. Everything's automated. This is automated volatility zones, green and red. This is support. This is resistance. That's it. Support and resistance. Call it floors and ceilings. Call it supply and demand. Doesn't matter. It's all the same thing. How is it calculated is the difference. This is historical volatility. I'm looking back at 6 months of typical price movement ranges for that symbol. We dial it in to the volatility behavior of that hour of the day. So from 9 to 10, 10 to 11, 11 to 12. This is dramatically different than, say, average true range. Nothing wrong with it, but it's a completely different calculation. The other tool that I have is the multi-structure down here. In other words, what's the momentum? Bullish, bearish, neutral. What's the trend? Bullish, bearish, neutral. And by the way, all this is essentially the 8, 13, 21, and 34 period exponential moving averages. Yes, there's a couple other things in the code, but the root of it are these EMAs and their relationship to one another. And depending on the way these 4 moving averages are interacting, I can determine what momentum and trend are. The next thing are these really prominent support and resistance levels. Again, automated. This is loosely based on Darvas boxes. So it's not the traditional Nicholas Darvas box, but it's essentially what forms the box, and then therefore what forms support and resistance based on price. So while this is volatility, these are price-based levels based on a price pattern. Okay. And the last thing on this chart is this zone right here. Very simple. Again, I don't believe in black boxes. I'll always tell you what's on my screen, how we generate it. I look at the 9:15 in the morning candle on a 5-minute chart. This is 9:15 a.m. Eastern. And I pull the 50% of that 9:15 5-minute candle. And you can see there's a lot of interaction at that level. If price is above, it's typically going to be support. If price is below, it's typically going to be resistance. Again, not a core strategy, but I like to know where that zone is. These zones are far, far more accurate and more powerful. The last thing is knowing where the previous session close is. All right, you want to know what the 4 p.m. close for stocks were. And I don't even mind to use this for futures as well. You can use the cash close, or you could use the 5 p.m. for futures. But I really do like the 4 p.m. cash close applied to ETFs, stocks, and futures, even though futures don't technically close until 5 p.m. That's what's on the screen, right? No black box. What we did this morning is we bought NVIDIA 180 calls when price got down to 180.31, which was right in here. You can see we would be willing to scale in at 2 other levels. Now notice every single scale in is already determined. The difference between adding to a loser and scaling in is usually the difference simply stated like this. Do you know all the levels you want to get in at the time of the original trading plan? Seldom are ads, which is a 4-letter word to me, seldom are ads predetermined levels. They're almost always a reaction to losing in an effort to reduce the cost basis or dollar cost averaging. I don't do that. By putting all these levels out there for the members of my trading room ahead of time, this is ahead of time, right? Everyone can determine whether or not they want to go with every one of these levels or if they want to wait for one or the other. There's no right or wrong here. It's just really personal preference. All right, so notice the first target is also put in the alert. Unless you know what your first target is, there's no way to manage risk. So once this thing got to 180, 180, the idea is to do what? Scale out, right? Now, if we don't hit 180, 180, another level that I encourage traders to use is a 25% on premium gain. And the reason I do that is my typical stop loss is 25%. And this brings me to at least a 1-to-1 risk reward. Would I like better than that? Absolutely. Typically my trades risk 25%, and typically my first reward could be 25%. Habitually we end up with 50 to 75, even 100% reward, but I'm not setting up the trade for a 1-to-4 risk reward. I'm usually looking at a 1-to-1, and then I'll move the stop to break even upon reaching the first target. The optionals give traders that opportunity to move to the first target a little sooner. So 180.40 was where we looked for that first target, which was right in here. And then we can move to a break even. That way, if we don't hit 180, we're not letting all this unrealized profit go to waste. And if we come back to the break even, game over. If we keep going past the T1, clearly I could go to a T2. None of that was the case this morning with NVIDIA. The next trade we set up was gold. And when I'm setting up gold, what I'm typically looking at are GC futures. And you'll see that in the notes, I'm giving the alert out to our members using GC futures. The reason for this is gold wakes up at 9:30. The pre-market is very thin, it's very low volume. So what I'm looking to do is give my futures traders some guidance, because there are a number of traders that will trade the GC or the MGC futures, and then the rest of the room will focus on GLD. If you've never traded futures before, start with the ETF options. Let those be training wheels as you start to understand the behavior of the underlying. So let's switch on over to GC. And what we wanted to do is buy those GLD calls or the futures when price gets down to 41.77, 41.73.5, and 41.68. Now you can see here, we hit both the aggro and the moderate, and that was right in here. Now we did not get to the conservative, no problem. That gives me 2 fills. Again, everything needs to be. We want to have everything available to us before we get into the trade. And the first target was 41.87, easily hit that. Second target was 41.97, also, again, easily hit that. Now, do I close the trade after T2? No, I'll just use time. So you'll notice it's 3:44 as I record this. In the next 6 minutes, I'm going to go ahead and close out with a T3, this gold trade. So the last exit is usually based on time. Day trading means in today, out today. All right, that takes us to the Dow. That was our next setup. And this is, again, all before 10:30 in the morning. 9:51, we get a DIA opportunity. So once again, I'm looking at a few things. I'm looking at the green support zone of the hourly price movement range. I'm also looking at the support and resistance of the Darvis. So I have 2 things going on here. This is great. And what I'll do with the Darvis is I'll grab the lower eighth or the lower quarter of the zone. So all I'm doing here, or I should say lower eighth or the lower 12.5% of the zone. Okay, so however you want to think about it. And this is where that lower 12.5% or lower eighth is. You can see the wick that got down there. That triggers our entry. Gold is a long. Dow is a long. And again, we're determining these levels in advance. So there is DIA. And just for example, we set this up at 9:51. It triggered at 10:15, right? So whether you got the trigger at the 10 o'clock candle or the 10:15 candle, by having those levels out there in advance, you can prepare how many contracts or how many options contracts, futures, YM, or DIA calls, and you can see what happened. So again, once again, you see the first and second scale out, and I'm approaching my T3, which I'll do in about 4 minutes here. And that's going to be the T3 and the close of the Dow. We also played Bitcoin this morning. IBIT is a great ETF for Bitcoin. Now, if you're trading micro Bitcoin or the BTC futures, great. Once again, you'll notice I used the BTC. This way, if traders want to trade the futures contract, they can. But traders who want to trade IBIT, the Bitcoin Trust ETF, they're still watching Bitcoin. And again, the reason is, rather than starting to trade this ETF that starts with volume at 9:30, I'm watching Bitcoin that has been trading for hours and hours before the open. And this way, my indicators, the structure of the 5-minute chart of Bitcoin, I already have a running start. I'm not waiting for IBIT to figure out what it wants to do, because it's going to reflect what Bitcoin was doing. All right, now what do we do here? At 9:55, we set the trade up, and the whole idea was to take advantage of this Darvis. So some of these examples had the hourly price movement range. This is the automated support and resistance of the Darvis. And once again, we get in that lower eighth, or that lower 12.5%. This right here was the window for entry, and you can see what Bitcoin has done in the meantime. All right, so we set this up at 9:55, and this ultimately triggered between, let's see here, 10:20 and 10:15. I circled the wrong area. So we entered in here. Now you might say, Rog, what do you do with this? Absolutely nothing. Absolutely nothing. After 10:35, what I say is pencils down. And even though it revisited this level, that was just watching a little bit of gain, watching a little bit of losing those gains. It revisited that same level, and that's where it ultimately took off. Now the risk was 15%. So whatever I pay for the IBIT calls, I'm willing to risk 15% of premium paid. And 15% was more than enough movement to allow us to take this little wiggle, and then it took off. And this is where a lot of traders will use max debit, which I'm going to know I'm wrong long before 100% of my premium evaporates. It's a huge mistake traders make. There's no reason to be super bearish on Bitcoin. That's really where I'm making my decisions. Notice all the prices are in Bitcoin. I tightened to 15% because Bitcoin was testing the previous session close. So rather than using the 25% that I usually use, I'll tighten it up to 15 because price can start to slip through this level. I don't need to be caught up in a flush to the downside as we break through the previous session close. So tighter stop on Bitcoin, still enough to let it wiggle. Nice winner on IBIT or BTC. The last trade that I was looking to get was the NASDAQ. So this would have been the 5th trade on the morning. And we were managing a lot, I will tell you. We were managing 4 open trades, multiple targets. And I just want to show you what that Darvis would have looked like. I did not get this fill. Here's my Darvis once again. Here's my lower eighth. And you can see 2 candles got into that zone right there. And that would have been the 5th trade of the morning. So had I not had 4 trades on already and managing winners in those, I probably wouldn't have gotten to this a little late, but it's going to happen. And I mention this because you can't touch all the water. Don't worry about the trades you miss. We went 4 for 4 today. We could have gone 5 for 5, but that's okay. There's always going to be something that triggers that as a day trader, I just wasn't quick enough to cycle back to and catch. But that's exactly the same setup into the hourly price movement range and into the Darvis. So 3 core setups, that's an example of what we do. I did not have a trending mean reversion setup today. So we used 2 out of 3 of our core setups. Don't have 19 setups. Heck, don't even have 6. I would say start with somewhere between 1 to 2. And if you can handle that, go to a 3rd. My 3rd has very strict criteria. The wave entry or the mean reversion entry means I must have a trend. So that will only be something I will be looking for in a trend. And none of these symbols this morning were really trending. So it was just focusing on 1 or 2. Oftentimes they overlap of my core setups. That is how you day trade. 1 hour a day, focusing on the first hour. And then after that, a lot of the members in our room, they head out, right? They know what these levels are because we've already identified where T1 and T2 are. T3 is mostly time. So they can step away from the desk. They can leave an alert on their platform. They can leave an alert on, say, TradingView. Their phone will flash and they'll say, oh, okay, it's time for me to scale out. Entries are very difficult to do mobile. Exits are far easier. And then I also teach our traders to use something called the expected price. You can actually project what approximately the option will be worth at a certain price in the underlying. So again, you can be very hands off after 10:30. And this is what we did this morning. We're going to be talking a whole lot more about this very, very soon. I have a webinar that I'm going to be doing about the way that I day trade. We had 10 day trades so far. This is Wednesday, the 26th. We had 10 day trades this week. And it just happens to be we went 10 for 10. That's not usually the kind of win rate in any way that I want to say is likely sustainable, or I would even expect. My typical win rate is going to be about between 62 to 68%. So of every 10 trades, I would expect to lose 3 or 4 of them. That just wasn't the case this week. Not typical at all. 90 and 100% win rates are a myth for the long term, but every now and then, when price action is moving the way we need it to, and we're patient about our entries, we can really get some great day trades done in the first hour of the day.